The sixth learning objective is to use different stock values in decision making. There are several different stock values in addition to par value. Market value, book value, and liquidation value are all used for decision making. Market value or market price is the price for which a person can buy or sell a share of stock. The corporation's net income and general economic conditions affect market value. The Internet and most newspapers report stock prices. Log on to any company's website to track its stock price, which usually changes daily. In almost all cases, stockholders are more concerned about the market value of a stock than about any other value. Liquidation value is the amount that is guaranteed to the preferred shareholder in the event that the company liquidates. If a liquidation value exists, it will be printed on the face of the preferred stock certificate. Note that this value only has meaning if the corporation liquidates. Book value per share of stock is the amount of stockholders' equity on the company's books for each share of stock. If the company has both preferred and common stock outstanding, owners of preferred stock have the first claim to the equity, just like they have the first claim to the dividends. Therefore, we subtract preferred equity from the total equity to compute book value per share of common stock. The preferred equity is as follows: book value attributed to preferred stock plus any preferred dividends that are in arrears if it's accumulative. Book value attributed to preferred stock is either the number of outstanding preferred shares times liquidation value per share, or the book value of preferred equity, that's the preferred stock account balance. Then we add any dividends that are in arrears if the preferred stock is cumulative. The common stockholders once again get whatever is left over in its stockholders' equity. If the company has both preferred and common stock outstanding, owners of preferred stock have first claim to the equity, just like they have first claim to the dividends. Therefore, we subtract preferred equity from total equity to compute book value per share of common. The preferred equity is either the liquidation price times outstanding shares of par value of the preferred shares issued. Also, any dividends in arrears are included in book value attributed to preferred shares. The book value attributed to preferred stock is divided by the number of outstanding preferred shares to get the book value of preferred stock. To determine the book value of common, preferred book value is subtracted from total stockholders' equity. This is called common equity. This amount is divided by the number of common shares outstanding. This short exercise reviews book value per share of common stock. Bronze Tint Trust has the following stockholders' equity: paid in capital. There's preferred stock, common stock, paid in excess of par, and total paid in capital, and retained earnings. Bronze Tint has not declared preferred dividends for 5 years, including the current year. So we're to compute the book value per share of Bronze Tint's preferred and common stock. Par value of preferred is $45,000, cumulative earnings $11,250, total book value attributed to preferred stock $56,250, number of outstanding preferred shares are 4,500, so the book value per share of preferred stock is $12.50. Compute the book value of Bronze Tint's preferred and common stock. The total stockholders' equity is $940,000, less the preferred equity of $56,250 gives us common equity of $883,750. Number of outstanding shares, 1,200,000. So the total book value of preferred stock is 74 cents.